Hey guys, hope you are all having a fantastic week so far. News recently came out regarding the Taylor Swift Eras Tour concert movie and its impact on AMC, which is now paving the way for other artists to follow in similar fashion, therefore putting AMC back in the spotlight. Reports have recently unveiled the remarkable achievement in the world of entertainment, that Taylor Swift's Eras Tour concert film has surged past the $100 million mark in global advance ticket sales. This milestone is merely the beginning of an extraordinary journey, with the film set to grace screens in more than 8,500 movie theaters across 100 countries, thanks to a collaborative effort by the company and its partners. The reception to Taylor Swift's Eras Tour concert film has been nothing short of exceptional, as it took less than a mere 24 hours for the film to shatter AMC's US record for single-day ticket sales revenue, a record that has stood for 103 years. This accomplishment underscores the fervor of Swift's fanbase and the film's undeniable appeal. For those that don't know, AMC forged a direct partnership with Taylor Swift herself for the release of the concert movie. This groundbreaking deal allows the film to bypass the traditional Hollywood distribution channels, making its way directly to AMC theaters. It's noteworthy that the entire financing for this cinematic endeavor came from Taylor Swift's family, with investments ranging from $10 million to $20 million. In return, the Swift family will claim 57% of the film's gross revenue, while AMC will receive the remaining 43%. These are early estimates, but the Eras Tour is poised to make an indelible mark, with projected North American ticket sales estimated at a staggering $2.2 billion. Moreover, it is expected to stimulate a remarkable $5 billion in consumer spending within the United States alone, with AMC potentially reaping around $1 billion in partnership returns. The film's debut has already ignited a frenzy of ticket sales, elevating AMC's prospects of a lucrative return on investment. Beyond its status as another box office triumph for AMC, the groundbreaking partnership with Taylor Swift has ushered in new possibilities. AMC, in collaboration with the pop star, now possesses a potent tool to boost revenues during blockbuster dry spells or production halts. Concert movies, it seems, are emerging as a burgeoning trend in the world of cinema. AMC has also announced its intentions to distribute a film based on pop icon Beyoncé's Renaissance World Tour, demonstrating their commitment to this evolving genre. This transformative venture signifies a profound structural shift in AMC's business model, offering a glimpse into how movie theaters are adapting in an industry traditionally reliant on Hollywood productions for revenue. It is a testament to the innovative spirit embodied by AMC CEO Adam Aron and his team. As I said in the previous video last week when I went over the Taylor Swift collaboration news, this is just the beginning. I can expect other big stars like Beyoncé, Bad Bunny and Drake, just to name a few. With sports being broadcasted on the giant screens and now concerts as well, AMC strengthens its potential revenue pipeline. If we could somehow get Adam Aron and their board members to stop dicking off their investors with relentless and needless waves of dilution, perhaps the tone in the conversations regarding AMC will improve and not be so sour. This actually goes in par with some of the conversations I have been seeing proliferate online. People are asking if the worst is over for AMC. It's a bit hard to say at the moment, because the actors' strike definitely affected the line of movies coming, which obviously will have its impact on movie releases. As I have said before, AMC's biggest peril is its looming debt, which stood around $4.8 billion as of June 30th of this year. AMC, from what I have seen, does not have enough liquidity to pay off its debt maturities. Its cash balance currently sits around $450 billion, which means AMC can handle those debt maturities I just mentioned for perhaps the next 2 years, since they combine for a total of $103 million. I honestly think that when Adam Aron recently diluted, it put off a huge number of investors off the investment totally. Had he waited longer for the stock to appreciate, it would have fared better and would have raised even more money from a higher valuation. But diluting so low definitely tanked both the stock price as well as investor confidence and trust. This is why I was so vehemently against Adam Aron's ape shares and the dilution. Still though, I think that AMC still has the capacity to survive. It will need a very strong number of successes in the coming 2 years, continuing to show growth and enhancement of both revenue and profit margins. This is why watching them find success showing concerts is a huge deal for them in my opinion. They have to continue desperately looking for more opportunities to raise money because we are on a tight race against a clock. We can definitely make it, but the responsibility lies on AMC's board to find success. Like I said a couple minutes ago, on top of its debt, AMC also faces a threat to its revenue in the form of the writers' strike, which according to the reports I received, definitely delayed a lot of the highly anticipated films that were slated for the upcoming years. An absence of major blockbuster releases for the remainder of the year casts a huge shadow on AMC's financial outlook given they are in a desperate position. Of course, Oppenheimer, Mission Impossible and Barbie definitely helped a lot, and Taylor Swift is already breaking records, but we need this level of success and more to sustain the business. Can AMC do it? In my opinion, yes they can. Is the risk of bankruptcy there? Absolutely. Future revenues will be impacted by the writers' strike, debt and the potential for more lawsuits coming in, which is why I think AMC is currently having shareholders vote on a series of questions that would allow them to evade more potential lawsuits against them. I also wanted to briefly talk about the situation taking place in Israel. Of course, most of you already know the barbaric disaster that unfolded this weekend over in the Middle East. The ongoing conflict in Israel has captured the world's attention for its devastating human toll and geopolitical implications. Beyond the immediate and profound humanitarian concerns, this conflict also has the potential to reverberate throughout global financial markets. In this essay, we will explore how the current conflict in Israel can affect various aspects of the global economy and markets. First and foremost, the uncertainty and instability associated with geopolitical conflicts often make investors nervous. As news of conflict intensifies, investors tend to become more risk-averse. This can lead to increased market volatility as investors reevaluate their portfolios and seek safe haven assets. Notably, regional conflicts in the past have resulted in market downturns and abrupt fluctuations. Second, the Middle East is a key player in global oil production and transportation. When conflict erupts in the region, there is a heightened risk of disruptions to oil supply chains. This, in turn, can lead to a spike in oil prices, impacting everything from the cost of gasoline at the pump to the expenses of businesses that rely on oil-related products. Any significant increase in oil prices can have a cascading effect on inflation and economic growth worldwide. Third, precious metals, especially gold, tend to be seen as safe haven assets during times of geopolitical turmoil. As uncertainty surrounding the Israel-Palestine conflict grows, investors may turn to gold as a store of value. This increased demand for precious metals can lead to rising prices, benefiting those who have invested in these assets. And lastly, the currency markets are intricately tied to geopolitical events. The value of a country's currency can be influenced by the perception of political stability and economic prospects. During times of conflict, investors may reassess their positions in currencies associated with regions in turmoil, potentially leading to fluctuations in exchange rates. This event just unfolded and it's impossible to predict the effects that it can have on the global economy as everyone is still reacting to the matter. However, what can be said with certainty is that the current conflict in Israel has implications that extend well beyond its immediate geographical scope. As with any geopolitical event, it has the potential to impact global financial markets. Stock markets may experience increased volatility, oil prices could surge, precious metals might see increased demand, and currency markets may fluctuate. Investors and policymakers alike must closely monitor the situation and be prepared to navigate the economic challenges that may arise as a result of this ongoing conflict. While the full extent of the impact remains uncertain, it serves as a stark reminder of the interconnectedness of global politics and economics. Note that this can quite literally mean Israel declaring war with Iran. Iran has already started issuing threats against the United States, saying that any involvement or retaliation will be met with attack on the military bases we sustain in the Middle East. Do not mistake the gravity of the situation as being minimal. Already we are seeing Congress members saying we should invade or attack Iran as well. This could mean a third campaign into the Middle East if conversations stop around the globe, and we know that Israel wants blood. It's hard not to blame them either, given the amount of evidence coming out of innocents being taken hostage, women showing signs of being raped and children being gunned down. I will continue monitoring the situation and reporting back to you guys. Thank you so much for your continued support and help. If you want to help the channel out, consider becoming a member. Let me know what you thought about the video below and tell me how you feel in regards to the situation in Israel. We also have a Discord open to everyone that is interested in day trading. We host a whole bunch of channels to not only give you guys the best alerts in the market, but also all the news and educational content you need to succeed in the long term. The Discord is free to join. We have thousands of members in it and there is no reason why you shouldn't be one of them. Come join us. Links are in the bottom description. To the moon.